On the 14th of this month, on Monday, the Monetary Policy Committee of the Bank of Namibia held its bi-monthly meeting to review the global, regional, domestic, economic, and financial developments. At this meeting, the Monetary Policy Committee of the bank decided to cut the repo rate by 25 basis points to 6.75% from 7% where it was, in order to support the domestic economic activities, as well as maintaining one-on-one link between the Namibian dollar and the South African rand. And the rate cut will be with effect from today, the 16th of August. Now let me just give you a bit of an elaboration or a summary of what the monetary policy looked at when they arrived at this decision. On the global front, I have to say that economic growth on the global front is expected to improve slightly this year compared to 2016. The projection for the global economy is expected at around 3.5%, the growth, compared to 3.2% realized in 2016. What is really supporting this? Why is growth much better in 2017 compared to 2016? I think we have started seeing some kind of positive recovery among the advanced economies, as well as the emerging market and developing economies. Now, when you look at the advanced economies, we see some positive signs in an economy like the United States, in France, in Germany, Spain, and Italy. All these countries, clearly, there are some very good and positive signs. If you look at the economic activities during the first quarter of this year, they are much better than what we have seen during the same period last year. Going forward, we see overall that the growth projection for the advanced economy will be around 2%, which is much better compared to 1.7% realized during the same period in 2016. Now, when you look at the emerging market and developing economies, clearly we see also strong economies in that category, which are led by countries like China, India. You could clearly see that China growth is still quite strong. It's going to hover around 6.6% this year. India is also maintained quite a respectable growth of around 7%. Now, the only country that is really finding it a bit difficult or they're going tough is South Africa. South Africa now, for the 2 consecutive quarters, has been in contraction. So that is, in that category, that is the only country somehow that is really finding it a bit difficult. In terms of what we see going forward, emerging market and developing economies will still continue to grow quite positively. And despite that, we see some kind of downside risk overall, globally. This downside risk will emanate from what we call is the inward-oriented shift in policies that may upset trade, that may also upset some cross-border inflows, So those are some of the factors that we really need to monitor. There are also developments on the geopolitical front, things around North Korea. We really need to monitor that situation also closely because it may have an impact on the global growth. Now, since our last meeting in June, monetary policy stances in advanced economies and emerging market and developing economies remain mixed. A number of advanced economies have almost kept their policy rate unchanged. The only country among the advanced economy that changed their rate, it was the United States, which increased their rate by 25 basis points. Of course, it was on an account of declining unemployment rate, because the economy started really picking up quite strongly. The labor market have gained strength, so they decided to increase the repo rate. Now, when you come to the domestic front, it's slightly different from what we see on the global. Domestic economic activities remain weak, especially when you look at some of the indicators that are at our disposal for the first 6 months. You look at indicators like construction is not doing so well. Manufacturing is also subdued. Wholesale and retail is also affected, as well as the transport sector. But there are also some positive developments in some other sectors. For instance, when you look at the mining, especially diamond mining, the numbers are quite positive. If you look at the diamond mining for the first 6 months of the year, you compare it to last year, the increase is almost by 22%, which is quite a respectable growth. So those are some of the positive, really, developments on the real economy that we see. But of course, on one hand, you see that construction, wholesale, which are also quite significant, they are subdued. Let's move now on the inflation front. Inflation for the first 6 months of the year, it's standing now at 7%. That is slightly higher than what we have seen during the same period last year, which was at around 6.3%. But the good news on the front of inflation, for this year, we started inflation in January at around 8.2%. But where we are now, inflation has really been coming down quite significantly. The inflation for July, it's standing at 5.4%. That clearly shows that inflation is on the deceleration and is largely on account of lower food inflation. I believe that the good rain has really quite helped a lot to realize good prospects for inflation. In terms of domestic demand, if you look at the private sector credit, the private sector credit has also slowed. If you take the first 6 months of this year, 2017, compared to the first 6 months of last year, the private sector credit as a whole, for the first 6 months of this year, it's standing at around 8.5%, compared to the figures of last year, the same period, of 12.5%. That clearly shows that private sector credit is coming down and is largely explained by slowdown in private sector credit extension to both household and corporate. The numbers that one really have to look at is at things like installment credit and mortgage. They are coming down quite significantly. If you look at the external sector in terms of the stock of international foreign reserves, you look at the number since 31st of July, the stock of international reserves stood at 32 billion. That 32 billion almost represent 5.2 months of import cover. You may recall where we are coming from, that we were at lower level, below 3 months, and then we move up to about 3 months. Now we are standing at 5.2 months of imports of goods and services. What really explains this? There are 3 factors for the recovery in international stock of reserves. The first one, there has been some kind of developments, the repatriation of funds from other parts of the world, especially South Africa, by financial institutions. 2, the payment by the Banco Nacional de Angola, the outstanding payment between us, that payment was done during that month. It also accounted for the increase in reserves. And the third aspect, I said, is the payment by BNA. I mentioned, what's the other one that I mentioned? Financial institutions. And then the final one, Yes, exactly. The ADB loan inflow. So those are the 3 factors that explain the improvement in the stock of international reserves. Now, when we were taking this decision, one have also to be mindful of 3 things that we observe. We observe a favorable inflation development. 2, we observe improvement in the international foreign reserves. Thirdly, we observe is international foreign development, the improvement in the foreign reserves. The other one that we observe is the consolidation, strong fiscal consolidation that has really taken a very strong position. So those are the factors that we were also mindful when we take this decision. In essence, that was our deliberations at the Monetary Policy Committee meeting. With this, we'll open the floor for questions, and that's it. Thank you.
Just want to find out again, what are the figures in terms of the money that was repaid by the National Bank of Angola, and how much of the loan inflow came in from the African Development Bank? Basically, it's those 2 questions.
Honourable Deputy Governor, you said that the inflation expectations look favourable. Do you have any indication as to the projected inflation rate towards the end of 2017? Then I'd also like to know, the economy has been slowing down over the last couple of quarters. What do you project the GDP growth figure to be towards the end of the year? Then I'd also like to know whether you suspect that the downgrading from the Honourable Moody's whether it will have any impact on the outflow of capital from the country. And lastly, with this positive announcement today, I'd like to know if you foresee any further repo rate reductions for the rest of the year. Thank you very much.
I want to know, going forward, what's going to sustain the reserves, because it's been propped up by the loan from the African Development Bank and also repayments from Angola. But I want to find out, going forward, will the reserve be supported by maybe money from exports and so on? I just want to know what will sustain the reserves. Thank you.
Let me take the first one, the payment by Banco National Angola. This payment, the amount outstanding now is about 204 million US dollar. There are still 4 payments left, which are in equal proportion of 51 million US dollar. The next payment now that we are expecting will be on the 26th of September. Another payment will be on the 26th of December. Another payment will be on the 26th of March. And the final payment will be on the 25th of June. So that will be the schedule of payment from BNA. How much came from the African Development Bank? What came from the African Development is 3 billion NAM dollar. What's the level of inflation? What are we projecting for the year 2017? We are projecting inflation to settle at around 6.2%. What is our GDP projection for the year 2017? Certainly, I should say that our projection still remains the one that we have just communicated. Our projection for 2017 will be in the range of 2%. It's much better than what we have seen last year. But of course, we are seeing new data. We have got now data on the real sector of the economy for the first 6 months. We will revise, we will look at the numbers again, possibly revise the growth. We don't know whether it will go up or it will go down. Of course, we have to look at the positive developments that we have seen. I have sketched you the picture that there are some positive developments. There are some weaknesses. And then we have to put all these numbers together for us to be able to know exactly that what will be now the new number for projection for the year 2017. Do we expect another repo rate reduction? That's a very difficult question. We only come to that conclusion to know what we should do after we have reviewed the developments within the economy. At this point in time, it will be too early to tell what will happen or what will be the next move of the Monetary Policy Committee. This is a committee decision, and we will only know during that time when we have to sit and reflect. Of course, taking into account the developments within the economy. What will sustain reserves? I should say, as much as we see those positive inflows for the things that I have just mentioned, one have really to admit that the element of fiscal consolidation plays quite a significant role in terms of reserves building. Why am I saying that? Namibia is a small open economy. Now, when you spend, whatever you spend somehow will have got an impact on your reserves, because whatever you have to spend on, you have to import. So in that sense, one could really say confidently that the fiscal consolidation path, which is followed by government, clearly has got some positive effect on the reserves, high reserves level that we are witnessing today. Downgrade of Moody, what could be the impact of that? I believe you had a very good discussion on this with the Minister of Finance. But I think from our perspective, of course, any downgrade, the country now has got, its grading is below the investment grade. The immediate impact on that will be increase in the cost of borrowing, especially when you are borrowing externally. I think that's really the most tangible impact that one could feel immediately when downgrade happens.
Thank you so much. My name is Kelvin. I'm a reporter from The Villager. Uranium had been projected in the last financial year to be the major growth driver. But then we see that uranium prices are not really performing quite well. How big a concern is that to you? And we have also noted an improvement in commodity prices that Namibia trades in, especially zinc. Do you think that the revenue that comes from there will be enough to make up for the gaps that are there in the weak uranium prices?
You mentioned that the decision was taken in order to support the growth of the domestic economy. In terms of private sector credit extension, are there any anticipated forecasts following this repo rate reduction?
In terms of how much flow in by the financial institution, the financial institution repatriated about close to 2 billion. So that's what we have seen. On uranium, clearly we were expecting much better prospects for uranium, especially when USAP started with production. But it's true, I think the international price of uranium, where it is now, is not that much favorable internationally. But the good thing is that at least for USAP, they are not affected by price developments because their production mainly is they are exporting to China, to the mother company. In that sense, we do not really quite a significant impact of international oil price on the production of uranium, especially on USAP. But of course, on other mines like Langenheinrich, they could feel that pinch. Whether zinc, with its pick up now, will really be able to take or to fill the slack left by uranium, certainly, of course, it will. But certainly, we wanted to see a much stronger growth from the uranium side. But of course, any growth coming from any other sector will really help in terms of sustaining some level of growth within the economy. On private sector credit, whether with this reduction we will see improvement in private sector credit extension, it's very difficult to tell. But of course, the reason why we reduce the repo rate, of course, is to support the economy. And the economy can be supported when you make the cost of borrowing affordable, especially for investment purpose. At this point in time, we do not want people to borrow for consumption, because if you really look at the household debt, it's on the high side. We are among the highest countries, around 85% as a percentage of the total income. So clearly, whatever borrowing that must take place must go towards investment. That's what we believe will be able to support the economy. On a downgrade, whether we will really see any outflow, we don't think so. I think, as I have just mentioned at the beginning, the only immediate impact that we could feel is, of course, the cost of borrowing. For instance, when you want to go to the international capital market, it's going to be a bit of a challenge. But whether there will be an inflow, that we don't think that at this point in time there are any concern. We are not concerned about any outflow that will emanate as a result of the downgrade of Namibia.
With the downgrade, what are the threats to our banks? Do you see any imminent threat to a downgrade to the banks as well?
The downgrade, what's its impact on the repayment of the existing loans, the Eurobond or the bonds on the JSE? And then, with your kind permission, what's the impact of the measures the bank took last year on car deposits and house deposits? Has that had a positive impact as far as you are concerned?
Just two last questions. The one is, when was the last repo rate cut? And secondly, pardon me if it's already been mentioned, what is our current inflation target?
The impact on some of the policy measures that were implemented in line with the Credit Agreement Act, that have we seen any impact on that in terms of credit extension? I should say that on housing, of course, we introduced what we call is a loan-to-value ratio. And on cars and other loans, we have introduced that when you are purchasing a car, there must be a deposit, which was not really the case before. Certainly, we believe that those measures have somehow helped to contain further credit extension, especially for cars and for housing as well, because it makes now slightly unaffordable for someone to mobilize additional deposit to put down. And that's why the numbers on the installment credit are going down. And you could also clearly see that the numbers for the purchase of the new vehicles as well has been coming down quite significantly. So the measures that were clearly taken, you could see some impact being felt on that front. On the inflation, whether we target inflation, we don't have any target for inflation. So there is no target for that. On the downgrade, whether there is any impact on the banks, I should say that the rating of institutions within a country are determined also by the sovereign rating. So there is a correlation between sovereign rating and the institutional rating. Yes, on the repayment, whether will there be any impact with the downgrade in terms of repayment? Of course, we don't see any impact with the existing bond, but if we are to do additional borrowing or to tap from the international capital market, of course, the premiums and the repayment will be, and the terms will be different. But with the existing one, the terms will not change. When was the last cut? I will leave that to you. Maybe I can't recall when last did we cut. So I think just let's go and check that.